Before we break this down, this isn't financial advice for your portfolio. It's my analysis for educational purposes. Warren Buffett just did something that should make every investor stop. The guy who's been successfully investing for 60 years, the same guy who called the 2008 crash and saw the dot-com bubble coming, just moved $344 billion into cash. Here's what should really get your attention. We're about to enter September, the one month that has historically destroyed more investor wealth than any other month of the year. Most people have no idea that September is basically a financial graveyard, but the numbers don't lie. And what I'm about to show you could save your portfolio from serious damage over the next 30 days. Let me tell you something that Wall Street doesn't want you to know. Over the past 5 years, the S&P 500 has declined in 4 out of 5 Septembers. We're talking about losses ranging from 3% to 9%. That might not sound like much, but if you've got $100,000 in your retirement account, that's potentially $9,000 just disappearing in a single month. But here's what makes this September potentially more dangerous than any September in recent memory. We're entering this historically month with stock valuations that are completely disconnected from reality. Companies that barely make any profit are trading at prices that would have seemed absolutely insane just 2 years ago. When these guys start asking questions about why they're paying 50 times earnings for companies that might never be profitable, that's when the real selling begins. Let's talk about Warren Buffett's cash position, because this isn't some random billionaire, and what he's doing right now should absolutely concern anyone who's fully invested in this market. Buffett spent most of 2024 systematically selling stocks and building the largest cash position in Berkshire Hathaway's history. We're talking about $344 billion just sitting there, earning maybe 4% interest while inflation runs higher than that. This means Warren Buffett is willingly losing money every single day just to keep this massive amount of cash available for something. I'll tell you what he's waiting for. He's positioning himself for the biggest buying opportunity we've seen in over a decade. Buffett didn't become one of the richest people in the world by chasing overvalued stocks at the peak of bull market. He built his fortune by being patient, by waiting for great companies to become available at reasonable prices. His exact words were that stocks have become expensive and the market could pull back at any moment. When Warren Buffett says valuations are getting dangerous, that's not casual conversation. Here's something that should genuinely concern you about the current market environment. Right now, we have companies trading at 50, 60, even 100 times their actual earning. Let me put that in perspective for you. If you were buying a small business that made $10,000 in profit last year, would you pay $500,000 for it? Because that's essentially what investors are doing with some of these stocks right now. But here's the really scary part. It's not just day traders and crypto speculators making these insane bets. Your pension fund is probably loaded with these overvalued stocks. Your 401k is holding companies that haven't made a real profit in years. Even those conservative balanced funds that are supposed to be safe are taking risks that would have shocked professional investors just 5 years ago. The problem is that everyone thinks this time is different. Everyone believes that traditional ways of valuing companies don't matter anymore because we're in some new era of investing. That's exactly what people said in 1999, right before the dot-com crash wiped out $5 trillion in market value. It's what they said in 2007 before the housing market collapsed and took half the stock market with it. And here's what makes this situation even more dangerous. If these stocks correct, they could pull the broader market down with them. September has always been historically weak for stocks, but this September could be particularly brutal because of the perfect storm we're walking into. We've got historically high valuations, who are going to take a hard look at what they're actually paying for these companies, and we've got a Federal Reserve that's trying to figure out what to do about inflation without crashing the economy. When September volatility hits stocks that are already trading at insane valuations, we're not talking about a slow decline that gives you time to think and react. We're talking about 10%, 15%, maybe even 20% losses, happening so fast that by the time you realize what's going on, it's already too late to do anything about it. And here's what makes this potentially more dangerous than previous September sell-offs. Today's markets are completely dominated by computer algorithms that execute millions of trades per second. These systems are programmed to follow trend, which means when selling starts, these algorithms will accelerate it beyond anything we've seen in financial history. Your financial advisor won't explain this to you because they make money whether your investments go up or down, and they're quietly heading for the exit. Don't care about your retirement plans or your kids' college fund. They're just following their programming, and when that programming says sell, they're going to sell faster and harder than any human trader ever could. Want to know something that should get your attention? The people who actually run these companies, the CEO, the board members, the executives who know exactly what's happening inside their businesses, they're selling their personal stock holdings at elevated levels. These are the people with the best possible information about whether their companies are actually worth these crazy valuations, and they're quietly heading for the exit. Warren Buffett isn't the only billionaire who's hoarding cash right now. Look at what other successful investors are doing. Hedge funds are building bigger cash positions. Private equity firms are slowing down their new investment. Even some pension funds are starting to question whether they should be chasing these valuations. But your average investor? They're still buying everything in sight because some talking head on financial television told them that time in the market beats timing the market. That might be good advice over 20 or 30 years, but it's terrible advice when you're buying stocks at the absolute peak of what might be the biggest valuation bubble in market history. The really frustrating part is that regular investors are always the last ones to figure out what's happening. Look, I'm not telling you to panic and sell everything first thing Monday morning, but I am telling you that ignoring what Warren Buffett's $344 billion cash position is signaling would be a serious mistake for anyone who wants to protect their financial future. First, you need to take an honest look at your portfolio and ask yourself some uncomfortable questions. How many of your stocks are companies that are actually profitable versus companies that are just promising to be profitable someday? How many are trading at valuations that would have seemed completely ridiculous 5 years ago? If you can't answer these questions, you're not investing, you're gambling. Second, understand that having cash available during uncertain times isn't being pessimistic or scared. It's being smart and prepared. When September volatility hits and everyone else is panicking, cash gives you the flexibility to take advantage of incredible buying opportunities instead of being forced to sell at the worst possible moment. Think about it this way. If you can avoid losing 40% or 50% of your money when the crash happens, you only need a 25% to 30% gain to be significantly ahead of where you started. But if you lose half your money, you need a 100% gain just to break even. The math of avoiding losses is way more attractive than trying to perfectly time the recovery. Third, focus on what Buffett calls quality at reasonable prices. Instead of chasing whatever trendy stock everyone's talking about on social media, look for companies with solid fundamentals, consistent cash flows, and valuations that actually make sense when you do the math. These are businesses that will not only survive economic downturns, but will probably emerge stronger on the other side. Buffett is still invested in the stock market. He's not hiding under his desk waiting for the world to end. He owns companies like Apple, Coca-Cola, and other businesses that generate real cash flow and have sustainable competitive advantages. The difference is that he's not chasing speculative bets on companies that might never make money. You have two choices. Keep listening to financial media saying everything's wonderful and keep buying regardless of price. Keep believing this time is different and markets only go up. Or pay attention to what the most successful investor in history is showing through his actions. Buffett's $344 billion isn't a mistake. It's a clear signal to anyone smart enough to understand. Here's the reality nobody wants to hear. We're living through one of the most dangerous periods in market history. Not because the economy is terrible, but because investor psychology has reached levels of complacency that historically mark the end of bull market. Everyone thinks they're a genius because investments have gone up so long, they've forgotten markets actually go down sometime. September is when reality crashes back into markets that have gotten ahead of themselves. It's when summer optimism meets autumn pragmatism. The most dangerous time to be fully invested is when everyone else thinks it's completely safe. Buffett didn't become a billionaire following crowds. He built his fortune understanding that everything in investing is cyclical. High prices are followed by reasonable prices, which create the best buying opportunities for patient investors. Right now, he's convinced we're near the end of this high price period. The question is whether you'll learn from someone who's successfully navigated these cycles for 60 years, or keep pretending September's weakness and today's valuations are just coincidences. Warren Buffett isn't scared. He's prepared. And after this video, so are you. You understand the historical risk, you've seen the valuation danger, and now you have a clear plan to navigate it.